Welcome to the Ensurity Group.
Here we go, guys. Let's talk about leads. Let's do leads here. I'm gonna close this out. Okay, so we have a few things are important on the commission side. We're gonna talk about commissions. We're gonna talk about leads, and I'm gonna move pretty fast because I think leads are leads, and I know agents, one of the biggest issues that agents, that any business, any type of business has is, who do I get in front of? And more often, right, to go to bat. Well, we're not, and you go and look at a lot of the leads that we work with. We work with the cold data, cold calls, right? And we go and straight buy out from US data or one of those big companies, Sales Genie. We buy the cold call list and go there. We also mail the mortgage protection of people that purchase mortgages or refinance their mortgage, and then we purchase that, do the mailer, and this is what this is right here. That this is what this represents here. And then we have internet leads, Facebook leads, but we see that every single lead, if we look at an agent that works at least 30 hours a week in his business, if you're dedicating 30 hours a week to your business, it doesn't really matter whether you pay $100 for a lead or 1 cent for the lead. It kind of averages out at the end of the day. And whenever you look at this big picture of agents, it always, unless you're like a super boiler room type of sales guy, the numbers are pretty average. They don't, there's no like, yeah, I got these leads from Google or from Facebook or from the mail or from the cold call or from Miguel's team or Steven's team, or, it really does not matter when it comes to the law of large numbers, okay? This particular one, if you order 3 to 9 month old leads, that means that we mail that lead to somebody that, because they closed a mortgage, bought a house, refinance that house, bought a timeshare, even a timeshare or a condo or whatever it is. They bought something. Now we mail them a letter saying we're going to take care of you in the event of untimely death, disability, unemployment, things like that. And then they reply, we get that letter back, and we call it. Well, the problem is that we're not the only people that mail them in the US. If you purchase a house, or if you refinance your house, you're going to get about 12 of those letters minimum in the mail. So the person that usually gets in first or gets in last, just press the button. Okay, the person that gets in, just make sure it doesn't buzz. The person that gets in first or the person that gets in last is the person that really ends up keeping the deal. But more than keeping the deal is how you sell it. I think that's important. I think that's very, very, very important, how you sell it, how you position that into the sale. We're going to talk about that a little bit here shortly. So if I send, I know that a couple of you got numbers with Occidental. I know that. So as you order leads, if you order 3 to 9 month old leads, or 10 to 18 or 19 to 36, just keep in mind that as we talk about leads, these leads, you can sell life insurance, you can sell Medicare, you can sell health, you can sell a lot of different products that we have. With that being said, on the older leads, 10 to 18 or 19 to 36, I would take that Excel that comes along with your PDF letters that the customer returns, and I would type in the telephone and the date of birth on that lead. Like you'll get all the information on Excel except the telephone number and the date of birth of that customer, because they actually write it on paper with a pen. So that does not come on the Excel. You have to do it. But I'm saying if you do it and you upload it to a dialer or you upload it somewhere, you can easily call and track and do what you need to do. The other thing is that as we, if you use our platform to make the calls, you can track them, you can upload them, you can follow up, you can text. So you can do a lot of those things because you should have all that help to reach that customer, right? So if you get 100 leads, basically we are expecting $4,500 in annual premium from you. That's what we called the PPL minimum, premium per lead. That's the minimum that we expect. In this case, if we send Patrick 100 leads and Guy 100 leads and Jocelyn 100 leads and David 100 leads, that would be 400 leads. So we're expecting from David's team that he submits $18,000 in annual premium. Okay, if we send you 400 of the 10 to 18s, it's $8,800 that we are looking for. And if we send you the 19 to 36 old leads, then it would be $6,000 that we are expecting on annual premium. Okay, that is, if your team gets 400 leads, you better start calling them and you better be ready to call them, because you don't want to sit on these leads any longer than we have aged already, right? And then you need to do the right approach to the lead, as you see on some of the videos and some of the scripts for this type of lead. With that being said, you got to have a goal, because I know a lot of companies out there that say, yeah, we're going to pay you 100% or 105 or 110 or 130, 180%. Well, that's really great if you're going to do high volume, because chances are the numbers work like the numbers should. No better, no worse for anybody. It is a statistical fact that 30% of your business will go by the wayside, and 30% of the submitted apps will not get approved. It's not the company. It doesn't matter whether we're talking about Occidental, CFG, Mutual of Omaha, Medico, Americo, Foresters. It does not matter unless it's a guaranteed issue company. They're gonna accept everything, but then you cannot go over $30,000 on coverage. Maybe 30,000 max. So between 20 and 30 is gonna be the max. This is gonna accept everything you got. But if you're dealing on the standard average companies market in the US, it doesn't matter what company. You're gonna get 30%, they're not gonna persist, and 30% they're not gonna place, period. So it doesn't really matter. Again, and this is very important to me, because you might be the person that's gonna submit 10 apps, and you might be the person that the first 3 apps that you submit will get declined. If you understand the numbers, You cannot beat the numbers, and the numbers cannot beat you. The numbers are the numbers. Make sense for everyone? So that's really the expectation. Okay, that is why we're expecting, if I send you 400 leads, we're expecting 18,000 APV, but we're doing submitted business, not issued and paid. If you submit, we're okay with that because you have done your job. Your job is not to get the policy. You're not the underwriter or the company that will approve it. Your duty is to get it to submit and follow up with the pending if anything else is needed. But once you submit 18,000 as your team, you got to understand that we already know that whenever we see it on the books, 30% is going to go by the wayside and 30% is going to not persist over 1 year. So we're already looking at 60% average, and I'm giving you worst case scenario numbers, 60%. So that's $6,000 and 48. So that's about $11,000 that is going to stick on the books on average. $11,000. That is the.
And these are, and Mo, just to clarify, these are the mortgage protection leads that we're talking about right now, right? On the
that
screen.
is the. It doesn't matter what type of lead you submit in.
Okay.
Even if it's your own personal deal. The numbers, like I said, the numbers are the numbers.
Gotcha.
Mm-hmm. Good question. Yeah, the numbers are the. So even if it's your mother that you're writing, chances you got 30. The same statistics work on that. You know.
Oh, if I close my mother, she's not gonna cancel in a year. I promise you.
Yeah. You know, it's funny because mine did.
Did she?
Of course.
My mom was in my with my other company. She was my first client, and then she was my first client here too. When I canceled her from the old company and brought her over.
Yeah, my mother did by mistake. She just sold her, and you know, just one of those things. But
yeah,
but we got her back. So, but anyways, that's what mothers do. But the numbers, you cannot beat the numbers, and the numbers cannot beat you. That's the caveat, right? And the second thing is that when we offer the lead and the support and the team and the platform and a lot of the things that we can help you with, service, you know, pending, things like that. The main numbers, the main driver of your contract is going to be the home protector, and Secure Life Plus. Those are the biggest commission deals. The other ones, the OBA, which is the really inexpensive term, the OBA, which is the really inexpensive term, and the standard product, which is the actual standard, which has 5 or 6 different products within that deal. They pay less. They pay less because this is the OBA where you sell somebody, 40-year-old person. You sell a 40-year-old person for $16 or $20 a month for $200,000. So obviously, if that is the least expensive product in the market, somebody's gotta either the customer pays or the commission pays. So it just gotta make sense like that. So I'm just sharing how to understand your business better, right? The expectation better. Okay. So once we move there, let me pull the other copy. So I see that a lot of the agents, and I want you to kind of focus into, let me change this right here. Okay, so we're gonna, the second thing, or the actual, we put the expectation on the lead. We have to have a way to track your lead, make sure that you're working your lead. because chances are, here's what happens every time, and we're not doing it anymore because we spend a lot of money and we don't want to do that. So let's say that last time I sent David 100 leads, whether he worked them or not, we already checked, and his business, he already submitted, I want to say right now off the top of my head, $10,000. So he already covered his $4,500 commitment. Yeah, but if we send you 100 leads and we get 0 in return, and then we called you 30 days later and say, hey, what happened, guy? What happened? We sent you 100 leads, and you go, oh, I'm going to start working them right now. You're too late. You're too gone. You're too slow in our business, right? It might be slow for us as a business. You might be full speed on your business, but remember that we are sending you that lead, and we need to put speed on our business, on the person that's giving you that lead. Why? Because if that lead costs $20, we're sending you $2,000 worth of leads. You multiply that times 5 or 6 or 10 agents that are on the call, it's going to be $20,000 in leads. So that's why we need speed on that business, and that's why you have skin on the game, and your skin is go to work. And I'm going to be the most honest guy that you'll ever meet. Blunt. I'm blunt. I'm dry. I use bad words sometimes to get my point across, right? Because I was taught like that when I was in school, I guess. I don't know.
I like it.
Right? So I'm like Gary V right? I'm just like, Jesus Christ, get to work. So that's me. I'm gonna tell you, but it doesn't mean that I'm mad. It doesn't mean that I'm anything. It just means that I like making money a lot to help a lot of people, but you got to do your job too. And a lot of the agents, they sell on benefits because, see, the funny thing is that, hear me out before we talk about the product, because the product doesn't matter. You don't matter. Mo doesn't matter. Omar doesn't matter. Steven doesn't matter. Let me repeat this, because once you learn this, let me ask, I'm not even going to ask. I'm just going to take a wild guess, because David, you still remember when before internet, were you in business or kind of trying to get running at work in business, trying to work somewhere before the internet? And the only way that you could know about me is if you received something in the mail, if you heard me on the radio, or if you saw me on TV on a commercial.
Yeah.
And I would talk about how great my product is. I would say how great my product is, and I would say, buy it because it's the best product in the world, and we got confined care, and we got cash accumulation, and I'm Mo, and I'm the super agent, and I'm good, and I'm fast, and I'm the best thing since this sliced bread, and all this BS, right? But that was 20 years ago. And I see the agents still trying to sell them benefits when the people don't give a rat's ass about that. If they want to know about you, they already know. They got this little thing that's called a cell phone, and they have a little app that's called Google. They already Google what life insurance is. They already know what the best product in the world is. The only difference, the gap, I call it the gap is whether you're gonna do what you said you are going to do. Get to the point, because right now, nowadays, the people don't have the time to hear you, hey, this is David Tucker, and I work for Ensurity Group, and we have a great product that's called Secure Life Plus that accumulates cash, that has this, the bottom line is how much is it going to cost me and what is it going to do if I die? That's it, guys. Don't make it too complicated, because agents that are selling on benefits, that's why the older companies, and some of you are still tied to some of the older system, that all they do is sell on benefits. Why? Because they have been on the market for 100 years. And I'm not exaggerating, 100 years. So all they could do is sell on benefits. And then you try to fill a need. Think about this. You want to try and sell on benefits? When you try to sell me on benefits, when I already got my Google and my YouTube and my everything that gives me what I need to know, and then you try to sell me on a need. You think that you already know the problem that I got, and you try to solve that. And you haven't, any of the time, you have not resolved and listened to me on our 20-20-20 system, which is a basic, a basic 1 hour call with relationship building with the customer. Once you get to this point, it's a done deal. But once you get to solve their real problem, it's a sale. It's the gap that you're trying to do. But now the agents are not focused on the gap because they're too busy learning benefits, and they're trying to fill a need that they think that I have. See, I'm going to give you an example. I travel a lot. Usually when I travel, I fly. And when I fly, I stop at 1, 2, 3, 4 airports. And I have a device. Have you guys seen the readers? The readers, right? No color, black and white, just the note taking and reading. And that device, I take it with me everywhere because I'm a note taker, and I write down my agenda, and I write things down that I'm going to discuss on the meeting. So last time I went out of the country, and I said, well, I'm going to be over there for a week, and I already got a charger for so I was thinking about my chargers. I was thinking about the chargers I carry, and I have 2 laptops with 2 different chargers. I got 2 phones with 2 different chargers. I had my tablet. With another charger, and I had my Bluetooth speaker with another charger. And I had my trimmer for my shaving with another. And I was looking at my luggage, and I said, man, that's a lot of chargers. I said, well, I'm going to try to buy a new phone that uses the same charger. I'm going to cut that to 1. And then I got my reader, and this one. I said, man, this one, the battery lasts for a week. I'm not going to take my charger. So I minimized that charger. So I ended up with like 3 chargers. So I got 3 chargers on my luggage. That's fine. I get on the airport. I get to my meeting. I get to the city that I'm going to. And I said, man, while I do this, wait on the airport while they pick me up, I'm going to start reviewing my notes. And I reached into my bag. I reached into my bag, and I took out my reader, and it said 2% battery. And I went, oh, crap. And I looked around at the airport, and yeah, I saw one of the stores, and I said, man, they're going to get me. They're going to get me. So I went over there, and I said, man, do you have a charger for this reader? Because it's one of the remarkable branded readers, different, right? And he says, yeah, as a matter of fact, we do. And he said, they're over there. And I said, I'll go get one. I went and got one. And then I saw the price, and I was already mad because the device wouldn't supposedly not run out of battery in a week. And I had just charged it the night before, and it was full of battery. So I was already mad at the company. And now I have to pay $79 for a charger that I already had at home that I didn't carry just because. I was already kind of predisposed. And the person at the airport, you know how they follow you around? Make sure you either don't steal stuff or that they push more stuff on you on the electronics, right? So he kept asking me, do you need something else? And I said, no, I'm good. Yeah, we got great promos on bags. So do you need something else? And I said, no, I'm just here for the charger. I'm just trying to see if I want to decide whether to get it or not because I already got one at home. And finally, I decided, went to the register. I put the charger there, and and the guy asked me again. He had the audacity to ask me again, do you need something else? And I said, and I don't want to be rude, but you asked me 3 times. I said, no, I'm in a hurry. I want the charger. Just get me out of here. And then he said, yeah, I'm sorry. I apologize. He turned around, grabbed the bag, put the charger, and he was going to hand it to me. And then he stopped and he said, and he was very smart because I knew he was trying to position himself and I didn't see it coming. But he said this, have you ever had one of your devices run out of battery because of the case, because we have a great case? And I said, no, I got the case, man. Just get me out of here. And he said, no, see, you don't understand. Have you seen this device? Because inside the cover, it's kind of dented so that whenever you close it, there's no buttons that are being pressed. And my guess is, since you said that you charged it last night and you don't understand how that happened, I bet you is your cover. And then I said, let me take my tablet. I took it out of my briefcase. I closed it, and yep, it was pushing the power button. And when I put my bag on when I put it, I was hanging it on my back, right? My backpack. It kept pushing the power button. It kept turning on and off and on and off until it ran out of battery the whole way. Even if I wasn't using it. So that's how it ran out of battery. He said, this one, you cover it. It doesn't push the buttons because it's a better case. And I said, man, I'll be there. He said, then I understood that the need that I thought that I wanted to solve, I thought the need was the charger. When in reality, it was the cover. And guess what he said? Would you like to have one? So next time you don't go through that. So I paid $79 for a charger I didn't need, and I paid $59 for a cover that I didn't. But I did not take the time to look at my own problem, at my own gap when I initially got my own device. I did not examine my purchase and the need that I really needed. I didn't care about the benefits. I didn't care about the need. He covered my problem. Does that make sense, people? And a lot of times we're trying to solve a need that you think that people might have. Like, what's a need? You're gonna die. You're gonna die, and we're gonna cover you. That's a pretty obvious need on life insurance, right? Health insurance, when you go to the doctor, will cover you. But have you ever thought about that my need on life insurance is not dying because I'm already self-insured, but my need for life insurance is putting money in there so that I don't pay taxes and nobody can take them away because they are funds that nobody can touch except the owner of the policy. That's my need. Have you ever thought that for somebody that you sell health to, the need is not to go to the doctor? Have you ever thought about it that way? I want health insurance, but I don't want to go to the doctor. Have you thought about it like that? Hear me out. I want health insurance so that I don't have to go to the doctor. So could you do different than other agents and do the could you position your health product or your life product or whatever product in a different way and say, if I'm selling it to Dave, if I say, hey, Dave, you know that our health products, that I'm Better product can keep you out of the hospital, right? And then you go, what? Yeah, I mean, you don't want to purchase my health insurance to spend some days, a week or two in the hospital, do you? You just want to have it there just when the real need arrives, which you'll eventually have one. But the main problem is that you want health insurance. You want health insurance for when you go to the doctor, but you really don't want to go to the doctor. You want to buy life insurance, but you don't want to die. And we're selling on going to the hospital and dying. Does that make sense, people?
Yeah.
Oh my God. That's good. So that was like 20 years ago. The way that people sell right now is like on benefits and needs, when in reality, we need to resolve the gap, the problem. And I put it over here for my team too, so that they could do English and Spanish on the top. So you gotta create a problem to solve a problem. You got to create a problem to solve a problem, and it's called resolve the problem. You got to create chaos. You got to create chaos and close that gap. Every cell has a gap. This is the gap. The problem is the gap. All sales are about change. All sales, you need to sign it. All sales are about change, but customers don't like to change, guys. So you got to be ready for that. Sales are emotional. There's no emotion, there's not going to be a sale, period. Customers like the change when they feel is worth the cost. So for you that are offering Medicare, if you think about this, and I go and you're 70 years old and I call you and I say, hey, Mr. Tucker, how are you? This is Mo Flores. I'm not going to bother you with all the accolades of my company and how long I've been in business, because in reality, what matters to you is that we keep you healthy. Isn't that better? Or you want to hear me go through, I was born in da-da-da and my parents met in da-da-da and I became,
You help me.
I got 2 degrees and I went to whatever school, that's BS. That's BS. But isn't it true, Mr. David Tucker, that the reason that you're looking at this is because you want to be out of the hospital. You want to get healthy. You want to be healthier. And let me tell you, is that the main thing that you want to accomplish? Well, yeah. Isn't that you're going to pay $0? Isn't that we're going to pay your medication? Isn't that any of that? You already know that you're going to die. You already know that you're going to get older. You already know that you're going to be into medication, but solve the gap. And if you make it worth it for the customer, the sale is done. And then asking why is very important, because that goes into the 20-20-20, right? 20 minutes, introduction, how are you? Find the problem. 20, the second 20 is the why. Relationship. And if you ask somebody why, so let me just go through something really fast and see if you can play with me, Omar. Can you open your microphone over there or not?
Yes.
Okay, let me play with you and think about you're an agent, right? And you got licensed as an agent, insurance agent. And the question is, hey, Omar, why do you want to study to become a licensed agent?
To make more money.
And to make more money, why?
Because I want a lot of different things, and that takes money.
So just don't give me like a big old long answer. Just go pow. Just like a 5-second Pow, right?
Yeah, I want a bigger house
Why?
because
What
I
would
want a
the big
nicer
house
living.
do for you?
Hmm?
Why do you need a bigger house?
So I can have a nicer living.
A nicer living, what do you mean?
Lifestyle.
Lifestyle, what do you mean?
He's going to keep taking you all the way down to the root of
I
your
know.
cause, which is freedom.
Yeah, he always does this to me.
Yeah.
Layers.
Freedom is the ultimate root cause of why you want to have
Yeah.
because you
Freedom.
want to be stress-free and no worry of debt or bills or
No, let me tell
Financially
you.
free.
Let me tell you.
There's no way.
You want money? You want money to buy a bigger house, to buy a nicer house, to have a lifestyle, but in reality, what would that do? If you have more money, more house, more nice, more lifestyle, more freedom, what would that do to you?
make you free.
Well,
No.
you already said freedom. What
Right,
would that
so-
do to you?
Happy.
Bring joy.
Happiness.
If you ask 7 whys, everybody gets to happy. So if you're asking yes to get to a happy place in an emotional happy, you're going to do the sale. Sales happen when the future is better than the present. And that's about recruiting. And that's about selling. And that's about life. Sales happen when the future is brighter than where you presently are at. Because nobody has ever told me, I want to become an agent because I want to have a shit life.
I really
doesn't
want to
happen
struggle
that way.
paying my bills.
I promise you that. I still haven't heard that one. But nobody cares about your product. Guys, and I'm not saying guy right here. I'm saying guys, people, agents, friends. Nobody gives a crap about your product or your service. Please understand that. That was 20 years ago. Whenever you saw the Tide commercials on TV, whenever you saw the Count Chocula cereal on TV and you went and bought it. Right now, nowadays, nobody cares about your product or your service. They care about that doing what it's supposed to do to solve a problem that you found for them. I hope this helps, because agents make the big mistake and they think that 150% equals more money. Agents make the mistake of thinking more product equals more money. Agents make the mistake of treating the leads differently because they come from different places. Please understand that. Nobody cares about your product. Nobody gives a shit about if you went to school or if you're a lawyer or if you're a Series 6 and 63 and 72 or 24/7, 365. It doesn't really matter, guys, because we're trying to solve a need. And that's why I tell people, listen, life is better in sandals. And sandals, literally, right? I really didn't tell David, listen, Ensurity is this, Ensurity is that, and I'm this, and I'm that, and here's what we're going to do. No, the key is this is what you need to do. You need to order leads, and you need to work the leads. There's this little green button on your phone that you push it, and then it dials out and you can talk to people. And that's what we are lacking, right? More activity. You got to find that intrinsic value for the people. What is that value that you cannot see, that you can provide as an agent? This step 1 and step 2 on benefits and needs is what we call the tell me economy. Guys, we're not in the tell me economy yet. That was 20 years ago, and I'll finish off this with this session, or this part of our session with this. The tell me economy was before the internet, where you had to actually go and buy the newspaper to see how your stocks did yesterday. Imagine guys, and I know that everybody here knows about crypto, insurance, mortgages, investing and all of that. Imagine if you had to wait for tomorrow to find out what happened today. Why are you still trying to sell? Like, we are in the show me economy. Show me you can, show me you can work. Show me you can submit. Show me. If you tell me you can sell. Yes, the agency M&O Inc. is Ensurity Group. Yes, we have several companies, and sometimes you'll be contracted with one company, and sometimes you'll be contracted with another company. So we have M&O Inc., Ensurity Group. Ensurity Group has got 3 or 4 different companies. My Medicare company, my Medicare program, and Valiance and Moonshot and soon Sentinel Health. So yes, we have, you'll be contracted under, depending on that umbrella where you want to work with, we'll be able to handle that.
Perfect. I'm guessing that's Mo and Omar.
That is, who said that?
That's me. That's Sky.
That's Guy, man. That was when I was like, I told my son right now yesterday, I said, listen, I have done all of this for you. You just need to get in the game. I said, only players win the game.
Right.
And if you stay on the sideline, you're going to be called a cheerleader. And you don't look really good in a short skirt and pom-pom. Guaranteed.
Oh, have you seen me in a short skirt?
I don't know if I want to.
I saw your Instagram.
Yes,
stop.
Cut this off, all right? Oh my God. Hey, but M&O, that's how I built the company, because yes, indeed, it was Mo and Omar. And we still, M&O holds, and still my son here present still tells me every day, why don't you do more for me?
Oh, that'll never end.
All right. So, okay, so now that we got this solved, I'm gonna move really quick to the product, because we said the product doesn't matter. So that's why I wanted to make sure that I made a big impact, and hopefully what I said helped you a little bit into the next sale, because what really matters is that you understand the process of how we play this game. And to get in the game, you got to have massive action. And massive action in our game is talk to somebody, right? And the most used products in the process, I'm just gonna download Texas right now, just because I think because I'm in Texas. No reason. The most sold product for accidental, it's going to be the Home Protector and the Secure Life Plus. If you still have a customer that has a policy or anything, or another quote with another company, even if you're doing a quote with another carrier and it's less expensive, send it to me. I'll challenge you to beat me on a quote. I challenge you, because so far nobody has been able to beat. And I don't work for accidental, guys. I don't work for accidental. They don't pay me to tell you this. Like they said, I'm not a paid advertiser. It is just that they don't have a fine print. They don't have a filter. They don't have like, this is what, they don't tell you on Secure Life Plus, like that, all the index bullshit product out there that tells you this is how potentially you will make money if the market, if the stars align. Is like SpaceX going to Mars. and if you want to sell that's you. Go ahead. Go ahead. I'm not going to sell it. I have it. I'm not going to sell it. But I'm going to sell the no fine print, straightforward. This is how much, because every time that you study your product a little bit, Secure Life Plus, and some other agent or agency tries to tell you, oh no, but the three-letter company out there has an index product, and I go, well, why don't you buy it? That's great for you. Buy it. You do that. But let me ask you something. You buy it and I buy it. We'll do 2 quotes and we'll take it to December 31st of 2025. And you tell me exactly how much money that index policy will have as a cash value. And I'll tell you how much my policy will have as a cash value. And they can't tell me because it's index and the guarantee is 0%. But I can tell you how much money my policy will have to the penny because it's guaranteed. So, don't get swayed by, but by the other companies, which, there's a lot of them. So anyways, this is the Home Protector. I always quote Home Protector. I always quote the 15-year. You got to go into page 5 of the agent guide and look at the level term life guaranteed to age 95, whether you get a 15-year, 20-year, 25-year, or 30-year. So I always quote the 15-year and I don't quote the return of premium. I just don't like return of premium, my preference. If I'm going to do return of premium, I like to do Secure Life Plus, but it takes a while. So there's a need for return of premium. Sure, there is, but you make that decision. There's some agents that I have that sell nothing but return of. So to me, just my preference, right? There's no wrong, right way of building a policy, especially when you're talking Secure Life Plus.
When you're talking return of premium, Mo, you're talking about a cash value accrual, right? A build up within the policy.
Yes.
Okay. Yeah. Yeah, I think that, through what tell me if I'm wrong, but what I've discovered so far is that the SLP, Secured Life Plus, is good for both a bare minimum term payment that somebody wants, as well as a maximum return on investment. So both cases can be done through the UL, the Secured Life Plus.
And it takes a little longer, but hell, let me let's do, and I want you to go over there and look at the product, look at the basics, right? Learn. I know that this is the first time for Guy and them, but I need you to get to submitting a policy, and then I'm gonna take David Tucker to next week through a more advanced session on Secure Life Plus because I committed to do that. But I don't wanna have everybody on the call unless you submit it and understand the moving parts, because I don't want to confuse you. It needs to be understood step by step, and it's not like a Tylenol that you take it one at a time, right? This one is, this one is like a dripper.
Yeah, something you keep continually learning and building your understanding of, right?
Yes.
And Mo, I've got a question. So far we've talked all about life leads and policies and stuff. With regards to Medicare, how are those leads going to be distributed, and how do we go about? Do we also have a certain amount of annual premium to submit upon received leads for Medicare as well? Can you kind of briefly go through that with us?
Yes. So here's what's happening with Medicare. We are not getting the response that we were supposed to be getting. But as it happens, I went last week, as I'm looking at my numbers for last year, we had a really, 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 really slow start like we have right now. And then it ramped up through the last week of November and December, and then into January and February. In January and February, during lock-in period, we killed it. We triple what we did on AEP. And that's always been us. We work AEP because everybody else does, but not because that's our bread and butter. We make our money during lock-in period. So you might be getting more applications during lock-in SEP period than through AEP. And that's just a fact.
And those are leads now that we can all expect to be getting at some point once those start coming in, right? Are those available in Colorado, Arizona, and California? Just so the guys on my team can know what to expect.
They are available in all those 3 states that you mentioned. Yes, they are actually 16 states now, or 13.
Perfect.
So you'll eventually get hit, and you might get a lead. And the difference between a lead and a application is a world apart, right? A lead is something that you're going to call on to make a close over the phone. But when we receive notification that we got an application signed on behalf of your name from the customer, that's already a done deal, okay?
Okay.
So, and we're expecting, hopefully, I mean, we can only control the controllables right now, and we're trying to call the people to return the apps. And, you know, sometimes they just wait. That's just what customers, yeah. So let's look at, I'm gonna put a quick quote right here.
Well, can I add something to this Secure Life Plus?
Oh, Nani, how are you?
I'm eating popcorn, so I'm doing great, and I'm happy.
Bring your popcorn, right? Yeah, there you go. I forgot to tell you, next meeting is bring your popcorn.
Whoops.
Good.
I love this Secure Life Plus for the mature people.
Yep.
For elderly people, I love it. This is so far the best that I found out in the market, like you said, that it's going to give me something for their money, because some people, they can only pay like $40, $30, no more than $70 a month. And it gives them quite a bit of insurance, unlike the other ones, which are final expense. And then with a minimum 20 guaranteed, those are pretty good. This is the one that I sold the most for the elderly people.
Yes. And,
Can you explain that a little bit more, why you like it for elderly? I assume that at a certain point, once their insurance drops off, now they're stuck without any insurance, right? Wouldn't this policy leave them without any insurance coverage?
No, you want to expand on that. If it's a healthy older folk, this works perfect. It's better than final expense, and you get paid more than final expense. So it's better for the customer and better for you.
So
you want to expand on that, Anani?
Mm-hmm. Of course. So if you want to work it more, I know you're trying to do like a term, one of the other one that has a term. But if you want to go to the level premium amount, well, let's start from the top. Instead of 1967, how about if we put 19, or let's do the age. On the age, yeah, 1953, yeah, yep. Male, non-smoker, Texas. So let's take off the 25,000 and let's go to the level premium. Okay, so there they say $73. So let's say that the client can only pay $55, and then you go to the minimum 20, okay, and then you go to get coverage on the top, on the coverage amount.
Sorry, let me take this out.
Oh yes, and the 10-year. Take off the 10-year more. Did you take it off?
Yeah.
Okay. So they can get $22,588 with $55, a person that is 65 years old, which it cannot happen if you're going to buy a life insurance. If you're going to buy a final expense, it cannot happen on any of the companies, not even Occidental. You cannot get a final expense with $55 for $22,000. So it's very, very good. And it's super simple, super fast. I love this. I love it, love it, love it. And what I love the most of it is the minimum guaranteed. It's a 20-year coverage. So they're 65. So when they turn 85, this policy might lapse. And you want to explain the rest of how to keep it alive, Mo?
Yeah. So on this one, really to keep it alive, did you see what Anani did? But she's been selling this for a little bit now. And actually, Anani, she's had some really high months, $30,000-$40,000 months. So look at, she worked it backwards. She put you know, and a lot of times I forget that we can do that, but she put what the customer can afford, and then we put minimum, and then we went over here to click on get coverage, and then it worked it backwards.
Because most of the time, when you talk to a client that is already 65, most of them, they only live out of their Social Security check. And they tell you up front, I cannot afford it. That's why I don't have one. I need one because if I pass away, I don't want to leave a burden to my family. Yeah. But yet I cannot afford it because it's over $100. So you tell them, okay, so what is your budget? And they tell you, normally they tell you $40, but then obviously you're going to tell them, you know, $40 is not going to do anything. So how about $55? Can we do 55? And normally, most of the time, 99.99%, they're going to tell you yes. So you give them the quote, you show them the amount, and they love it. And then you guarantee the 20-year with a policy. And then this policy also has a way for you to keep it alive after the 20 years.
You just have to pay more. You just pay more. You pay a higher premium than what the initial premium was. So that $55 premium goes up to $80, right? And they have to pay that to keep that policy in force. But now I see this is an increasing death benefit option. So that coverage amount, how long, I mean, where does it start? How long does it take to reach that? Or should it be on the level?
It should be whenever you have the older, increasing in level, it really does not affect the initial payment.
Yep.
It just it affects the accumulation of the policy. But once if you want to get all the questions that you just asked answered, so it goes right here.
Yeah.
Let me see. It's going to be over here. So I'm going to move to this page, and it tells you, obviously, if they're paying only the minimum, it's not going to accumulate a lot, right? But the coverage is going to be there. That's why they're not paying a lot. That make sense?
Yeah, absolutely.
How does it extend beyond that, though?
If you want to extend it, remember that this one can change premium. It's flexible premium. So you can change from 55, which you put as a minimum, to a maximum right here. So any number in between from 55, in this case, I lowered it to level, from 55 to 93, look at what it does. So any number between 55 and 93 is fair game whenever you change your premium, monthly premium. And look at what happens even if you pay the $93. I'm going to move to the same. So let's look at 80, 85 years. So you still got 22,000 and 12,000 worth of accumulation. Make sense?
Mo, this is Josie. To make sure that excuse me, to make sure that I'm understanding this correctly. So let's say, like in this example, the customer wants this $55 policy. However, what you're saying is that they can pay anywhere between, at any time, between $55 and the $93 to get a little more cash accumulation beyond the 20-year term.
Come again?
So what I'm understanding is that, for example, in this situation here, the customer wants to pay $55 a month. However, they have the option to pay between $55 and $93 a month at any time, as long as they have their policy. And then anything that they accumulate over after, paying over the $55 over the 20 years is their cash accumulation.
Not over the $55. Good question. Not over the $55. It's over the target pricing, which if we move to target, anything over target goes to accumulation. So anything over
Gotcha.
76.
Okay. Thank you.
Yep, good question. So that's in a very fast way the Secure Life Plus. But look at what we can do. Even if you got 40-year-old, when is 40? 1980, I guess. Look at what we can do. I know, David, you did one for about $1 million, something like that, right?
Yeah.
Yeah. So let me see. Coverage amount 250,000, and then we go.
Oh, I think there's a maximum on here. I don't think you can go all up to $1 million for a UL.
Yes, you can.
Oh,
So you can go 3 times that coverage amount in the term. So if you look at what I'm doing, if we just set a 40-year-old for $1 million with the minimum payment is $200 a month.
can you look up at a born in 1980? Change the date doesn't matter. Put it on smoker for male in California for those same numbers.
366.
Oh shit, that's cheaper than when I got him for an Olic.
Yep. Yeah. Yeah. So
That's what happens when you find out about these policies.
yeah, and let me look at let me show you the illustration. This is for a smoker, 40-year-old, and if you look at the breakdown, it's 250,000 universal life, 750 for 20 years on term. Very, very inexpensive, guys. $1 million coverage. We can
and anything above 100,000 is fully underwritten, right?
yes. Well, depending on the agent guideline, right?
I think it's
But yes.
250, no?
Yep. I think it's here it is. Let me see. And this one is very simple to figure out. Let me pull the agent guide right here. I'm gonna pull the little grid that they have here. So all of this is free to go. Simplified issue.
40.
Up to 65 years old under 99,000. See?
Entonces esa es la otra, esa es CFG.
Yeah.
Okay.
So this is where you want to be, and at the end of the day, people remember that's another. Hear me out, David, because I know you sold some big policies out there, which is pretty great. But does the customer really need $1 million? You know, think about what I told you earlier. Now that we discussed it a little bit, think about the gap that we're trying to solve. Think about the benefits and the need. Because the customer might want $1 million, but again, think about this. If I ask, if you are a true guy, right, a true doing your job person, you would ask, hey, David, I know this is Mo Flores. We went through all that stuff, and you want $1 million worth of coverage. You know, may I know why? And then
I want to be happy.
right. And then you just go straight to the end and you'll be happy, right?
Yeah.
Is that you want to be happier, or your wife wants to be happier, or your ex-wife? I mean, which one is it? All right. But whenever we start asking whys, if you go through seven steps, why do you want $1 million? Why? Do you really need? And a lot of times you will leave money on the table.
Yep, definitely. I was going to say that.
And it's okay, people. It's okay, because as long as your product does what it's supposed to do, you have done your duty and your job, and you fill that gap. And whenever you fill the gap, that customer, you have a higher chance that he is not going to go anywhere with anybody else.
Are there riders on the UL that we can add, like grandchildren and children?
Yes, there is. And actually, they're pretty.
I feel that helps cement the policy a lot when you got kids on there.
That's if they love their kids, right? I don't know.
Omar, you're in trouble, buddy.
Oh,
Omar, you are in trouble.
Son, What's up? No, he's my beneficiary on mine. So he's got it. He's good. So we got children benefits up to 25 units, up to $25,000. And you can add your wife and 3 other people. And you can have accidental death. And it's got, if you're outside California, you can add unemployment. And it comes with waiver of premium. It's pretty good. People, I know that we run 15 minutes over. I'm gonna have to make a hard stop. I got another meeting shortly, but I hope, Dave, that I was able to connect and
Yeah,
help
very, very much so. I'm going to spend some more time right now with the team, just going over illustrations, brochures, presenting, and then submitting applications, because they just got their agent numbers within the last 2 days. So they're going to be starting to dial right away. We'll work with Steven right after this to order up leads. Last thing I want to ask you is, right now we're getting Medi-Center leads for Medicare, right? So those are the ones that we can work, plus our own friends and family. And then at some point, you think we might start getting applications in where through that other system that you were talking about, where they are basically closed and we got to just go in and follow up and make sure that the apps are submitted. Okay.
Absolutely. Absolutely.
Okay. What kind of time, just so that we're prepared through training for that, when do you think that might start occurring?
I want to really say within the next couple of weeks, we should start seeing trickle, and then we should see like a shower of them, and then it just stops at the last 2 weeks of December, and then it starts back up in January. By the end of January, we're gonna do a lot. So
perfect. I just want to make sure that I've got time to train them and ourselves on it, in advance, so that way. And Steven's been great. He sent us a lot of videos and audios how to prepare for those. So
that's not what the other agency said about Steven.
Oh,
No,
yeah.
just
We
kidding.
love Steven. We're huge fans. I want to be like
That's
Steven.
awesome.
Yeah.
I'm just being hard with Steven because
So
he has to listen to me every day in the morning call.